Howdy, y'all. Welcome to Liberty Call. It's the Liberty Call for Thursday, April 28th, 2022. I hope everybody's having a fantastic day out there in the interwebs. It's been kind of sunny most of the day, but looks like we got some clouds coming in. So just kind of overcast here in the beautiful state of Colorado, the big square in the middle of the mountains. So anyways, like I said, hope everybody's having a fantastic day out there. It has been a pretty good day in the markets. Everything looked lots of greens. Today, I was waiting for an up day in the market to make some adjustments in my portfolios for clients and add in some hedges that, one up day doesn't make the market. So I think the longer term trend personally is headed in a negative direction. So I was waiting for an up day to add some of that stuff in. So for any of you clients out there, you're going to see some trades coming across your email probably later tonight or tomorrow. So, all right, well, let's go ahead and dive in and take a peek and see how the markets are doing today. The Dow Jones was up 1.85%, closing at 33,916. The S&P 500 was up 2.51%, closing at 4288. The NASDAQ was up 3.06%, closed at 12,871. Yeah, it's been down a bunch this year. I think it's down over 20% from its previous peak. Small caps are up 1.75%. The VIX was down 5.09%. It's currently sitting at 29.99. Still quite high, but not unexpected with all the volatility. Ooh, there's a deer looking at me through the window. Hey, girl. It's kind of the stuff you deal with living out here in the woods. So let me turn this off and I'll. See the deer out there? Look at her. She better not jump down. That's a pretty big fall off of that. Oh, now she's walking away. So, all right. Back to the markets. That was very interesting having a visitor. There's also a bunch of turkeys walking around in my front yard, and it's not my in-laws. All right, let's move over to the other exchanges here in the Americas. Canada was up 1.82. Brazil was up 0.55. Mexico was up 0.61. Heading over to Western Europe, Germany was up 1.35. The UK 1.13. France, same thing, up 0.98. The Euro Stoxx was up 1.13. Netherlands was up 1.38. Again, more greens until we get down to the first red I see is Belgium. They were down 0.35. Austria was up 1.13. And then we got a couple of a few reds here. Sweden was down 0.49. Denmark was down 0.05. The Russian index MOEX was down 1.68. The RTSI in Russia was down 0.68. All right. So then we got another rash of greens starting in the major Asian markets. Japan was up 1.75 for the Nikkei. Australia was up 1.32. New Zealand up 0.86. Moving down to China, or up to China, depending upon your perspective. There we go. Another out. For those, if you're wondering what I'm looking at, it's the Astros game is currently on right now. They're playing the Arlington Rangers, and we are currently up 3-1. Tucker hit a home run in the top of the inning it was tied up 1-1. Verlander's been just, killing it all game. And we did give up a run. I say we, I'm not part of the Astros. The Astros gave up a run in the bottom of the previous inning. I think we're in the 8th right now, and maybe the 7th. And then on the top of the inning, Pena got hit by a pitch, and Tucker blasted one to right field. So we're up 3-1, bottom of the 8th, 2 outs. Jake Taylor is I'm not Jake Taylor. What's his name? Taylor is up pitching right now. So probably by the time anyone watches this, the game will long since be over. So, all right, getting back over to China. The Shanghai was up 0.58. The SCSE component down 0.23. The China A50 up 1.08. DJ Shanghai up 0.58, the Hang Seng up 1.65, and the Taiwan weighted up 0.71. And mostly greens for these smaller indexes over here. So all in all, not a terrible day, or a pretty good day for the market. Again, I wouldn't get too excited simply because we're headed towards a world of crap right now. So I wouldn't get too excited about one up day in the market. So all right, well, let's go ahead and read through today's market recap. S&P 500 rides meta rally higher as tech flexes muscles. It's written by our friend Yassine Ibrahim from Investing. The S&P 500 climbed Thursday as a rally in Meta followed better than feared results, stoked bullish bets on tech and the broader market. Meta, the parent of Facebook, reported mixed quarterly results as revenue fell short of estimates and guidance was softer than expected. But the results weren't as bad as many had feared, and the social media company saw a return to sequential user growth, helping the stock surge 17% today. All right. Quote, while the outlook from Meta was below expectations, it was clearly a relief for investors and better than the worst case scenario that seemed to be baked into shares headed into the print, Wedbush said in a note. Amazon.com and Apple closed the curtain on big tech earnings after the closing bell. Both were up more than 2%. Chip stocks also added momentum to the broader market, broader tech sector, underpinned by 8% rise in Qualcomm after the chipmaker reported better than expected fiscal second quarter results and third quarter guidance. The chipmaker's results drew widespread optimism on Wall Street. Quote, we believe the setup for continued growth for 2H22, I guess probably the second quarter, remains strong as all drivers for F2Q and F3Q are joined by typically seasonality and incremental supply, Deutsche Bank said in a note. PayPal sold more than 10% after its first quarter results beat analyst estimates, supported by strong payments, volume growth, and net new active accounts. McDonald's also delivered better than expected results as price hikes helped offset impacts of rising costs and the Ukraine war. What the hell does well, I guess they shut down all their McDonald's in Russia. Its shares were up more than 3%. Teladoc fell more than 40% after cutting its full year outlook result following quarterly results that weighed down by softer demand. The wave of mostly positive quarterly results from corporates helped offset an unexpected decline in U.S. economic growth, but economists pointing to a strength of the consumer were quickly to downplay the report. Quote, we remain constructive on nominal demand, which continues to be supported by pent-up savings and strong wage gains, Jeffrey said. The surprise decline in the U.S. growth isn't expected to factor into the Fed's thinking, as above-trend inflation will continue to drive policy. Quote, I think the Fed will follow through for part of this journey with 2 or 3 aggressive increases, and they'll start to shrink the balance sheet, said John Raggard, senior portfolio manager, small cap equity at Spouting Rock Asset Management, told investing.com in an interview on Thursday. Energy continued its melt up as oil prices were boosted by fresh supply fears, as Germany reportedly is warming up to the idea for life without Russian oil. German representatives to EU institutions are reportedly ready to agree on a ban of Russian oil imports should Berlin be given enough time to find alternative suppliers, the Wall Street Journal reported, citing unnamed sources. Despite the rally on Wall Street, the market likely faces a rocky road ahead, paved with uncertainty that is likely to keep investors on the sidelines. Quote, I think until we get these uncertainties lifted on inflation, on the war, on supply chains, on Chinese lockdowns, all of the clouds that are out there have to clear a bit before I think people are willing to be more risk on again, Raggard added. So, kind of mixed, companies right now are reporting earnings from last quarter. And so, things are looking decent. Some things have obviously fallen, but again, the bigger picture, where things headed over the next, say, 6 to 9 months. Personally, I think, the steam has run out of this, and we are certainly headed for some turbulent times, but I'll leave it at that. All right, next article, U.S. economy shrinks in the first quarter. Trade inventories mask underlying strength. written by Lucia Mutakani from Reuters. The U.S. economy unexpectedly contracted in the first quarter amid resurgence of COVID-19 cases and a drop in pandemic relief money from the government. Well, the government stops paying your bills, and there's there's less demand. So that's crazy. Sorry. These allergies are horrible right now. The first decrease in gross domestic product since the short and sharp pandemic recession nearly 2 years ago, reported by the Commerce Department on Thursday, was mostly driven by a wider trade deficit as imports surged and a slowdown in the pace of inventory accumulation. A measure of domestic demand decelerated from the fourth quarter's rate, allaying fears of either stagflation or a recession. The Federal Reserve is expected to hike interest rates by 50 basis points next Wednesday. The U.S. Central Bank raised its policy interest rate by 25 basis points in March and is soon likely to start trimming its asset holdings. They keep saying that. They're going to do it. They're going to do it. It's kind of like for the 6 months up till March, they're going to raise interest rates at some point in the future. It might happen. All right. Quote, the economy is still showing some resilience, but the first quarter GDP report signals the start of more moderate growth this year and next, largely in response to higher interest rates, said Sal Gutierrez, a senior economist at BMO Capital Markets in Toronto. Quote, despite the contraction, the Fed has little choice but to hike aggressively in May to corral inflation, end quote. Gross domestic product fell to a 1.4% annualized rate last quarter, the government said in an advanced GDP estimate. The economy grew at a robust 6.9% pace in the fourth quarter. Economists polled by Reuters had forecast GDP growth rising at a 1.1% rate. Estimates range from a low of as a 1.4% rate of contraction to as high as 2.6% growth pace. Pretty wide. Was that that's a 4% gap. So the economy also took a hit from supply chain challenges, worker shortages, and rampant inflation. Last quarter's decline is a head fake as GDP remains 2.8% above its level in the fourth quarter of 2019, and the economy grew 3.6% on a year-on-year basis. Further, 1.7 million jobs were created in the first quarter, and manufacturing output grew at a 5% pace. Quote, it's nonsense that real GDP declined, said Conrad de Quatros, senior economist at senior economic advisor at Breen Capital in New York. But the mismatch hints at weaker productivity last quarter. Front-loading by business fearful of shortages because of the Russia-Ukraine war contributed to surge in imports. Exports tumbled, leading to a sharp widening of the trade deficit, which chopped 3.2 percentage points from the GDP growth, the most since the third quarter of 2020. Trade has now been a drag on growth for 7 straight quarters. Businesses have turned to imports to satisfy demand, with local manufacturers lacking the capacity to boost production. Business inventory increased at a 158.7 billion pace, slowing from the robust 193.2 billion rate in the October through December quarter. Inventory investment cut 0.84 percentage points from GDP growth. Stocks on Wall Street were higher as inventory investors shrugged the drop in GDP. The dollar rose against a basket of currencies, and U.S. Treasury prices fell. Growth in consumer spending, which accounts for more than 2/3 of U.S. economic activity, picked up at a rate of 2.7% from the fourth quarter's 2.5% pace, despite taking a hit from the winter wave of coronavirus cases driven by the Omicron variant. Sounds very scary. The loss of pandemic money to households from the government was partially offset by rising wages amid a tightening labor market. Government spending fell for a second straight quarter. Didn't fall enough, in my opinion. Strengthening labor market conditions were reinforced by a separate report from the Labor Department on Thursday, showing initial claims for state unemployment benefits fell 5,000 to a seasonally adjusted 180,000 for the week ending April 23rd. With a near record 11.3 million job openings at the end of February, employers are desperately hanging onto their workers. Even with food and gasoline prices soaring, there is no sign yet of consumers pulling back. The government measure of inflation in the economy surged at a 7.8% rate, the fastest in 41 years. After increasing at a 7% pace in the fourth quarter, inflation by all measures has overshot the Fed's 2% target. Yeah, by a long shot. At least $2 trillion in excess savings accumulated during the pandemic are providing a cushion against inflation. Workers shortages saw businesses boosting investment, with spending on equipment increasing at a 15.3% rate last quarter. They mostly bought computers and industrial machinery. Basically, they're finding ways to not have human bodies that they have to pay. It's easier to automate and not have to pay a lazy worker. That combined with solid consumer spending in hoist final sales to private domestic purchasing at a 3.7% rate. The measure of domestic demand, which excludes trade, inventories, and government spending, increased at 2.6% rate in the fourth quarter. Final sales to private domestic purchasers account for roughly 85% of aggregate spending. The housing market notched another second straight quarterly gain, but with the 30-year fixed mortgage shooting above 5%, the outlook is uncertain. While concerns remain that the Fed could aggressively tighten monetary policy and tip the economy into recession, most economists are not convinced, pointing to the strong domestic demand and signs that inflation may have peaked. Consumer spending last quarter was driven by services. The shift in demand from goods is likely to help ease pressure on supply chains, though the coronavirus-related lockdowns in China pose a risk. Quote, the U.S. economy is not anywhere close to recession, said Gus Foucher, chief economist at PNC Financial in Pittsburgh, Pennsylvania. Quote, underlying demand remains strong and the labor market is in excellent shape. Growth will resume in the second quarter, end quote. That's a bold statement there, Cotton. I have, I think a lot of these economists and, talking heads on TV just like to say, well, I think inflation has peaked, because if they're right, then, they look like geniuses. But I don't see it yet. Oil continues to climb. There hasn't been a slowdown in consumer spending. So until those things happen, until oil actually falls back to what we would consider normal levels, and we start to see the economy slow down due to, because it has to, because with the increase in interest rates, you're going to see a major slowdown in home building and people buying existing homes. So it's going to slow down that market tremendously. But when it's going to happen, I have no idea. Just looking at the bigger picture, that's what I'm seeing right now. All right, next article has to do with oil. Oil price rally on report that Germany drops opposition to Russian oil embargo. We talked a little bit about this earlier. It's written by Laura Sanicola from Reuters. Oil prices rally Thursday after reports that Germany is no longer opposed to an embargo on Russian oil, which could further tighten supplies in the already stressed global crude market. Traders were reacting to media reports of comments on Tuesday from Germany's economic minister, Robert Habeck, who said the EU's largest economy could cope with a EU embargo on Russian oil imports, and Germany hopes to find ways to replace Russian oil with other supply. Brent crude futures rose $1.89 to $107.21 a barrel, and WTI crude rose $2.61 or 2.6% to $104.63. Germany relies heavily on Russian energy imports and had opposed a full ban. Well, maybe Germany, if you hadn't shut down, or if Europe hadn't shut down all those nuclear reactors that y'all had, you probably wouldn't be in such an energy crunch or pinch. But hey, you're saving the environment. Those heavily polluted nuclear reactors are just, oh wait, that's oil and gas that does that. I'm sorry, I got those mixed up. Before the war in Ukraine, Russian oil had accounted for about a third of Germany's supply. A month ago, Habeck said the country had reduced its dependence on Russian oil to 25% of imports. Whoa! They went from 33% to 25%. Boy, those Germans, they're just crazy people. Quote, as a result of this, oil from the free world is going to be more expensive, and Iron Curtain oil will plunge further in value and be discounted more heavily, said John Kuldiff, partner at Again Capital LLC in New York. Moscow has started to use energy exports as a cudgel following the response of the United States and allies over Russia's invasion of Ukraine. Russia has cut off gas supply to Poland and Bulgaria and is trying to push the EU to adopt its new gas payment system that involves opening accounts at Gazprom Bank, where payments in euros and dollars would be converted to rubles. Russian oil production could fall as much as 17% in 2022, according to an economy ministry document seen by Reuters, as the country contends with Western sanctions. Despite the expected shortfall, the OPEC Plus group of producers comprising Organization of Petroleum Exporting Countries and allies led by Russia is expected to maintain its modest pace of increasing output when it meets on May 5th, sources told Reuters. The U.S. dollar surged to its highest level in 2 decades on Thursday, propelled by weakness in its major rivals, such as the yen and the euro. A stronger dollar is usually bearish for oil prices, which are priced in the greenback, as it makes it more expensive to holders of other currencies. In China, Beijing closed some public spaces and stepped up COVID-19 checks at others, as most of the city's 22 million residents embarked on more mass testing in an effort to avert a Shanghai-like lockdown. The most recent lockdown has disrupted factories and supply chains, raising fears over the country's economic growth. But Asia's biggest oil refiner, Sinopec Corp, expects the country's demand for refined oil products to recover in the second quarter as COVID-19 outbreaks are gradually brought under control. A slowdown in global growth owing to higher commodity prices and an escalation in the Russia-Ukraine conflict could further exacerbate oil demands. Again, I don't see any slowdown in oil prices right now. Until they get back to, let's see, oil was, let me go back over here and see what oil was, let's see what WTI was 2 years ago. All right. So back in 2017, oil was around $50 to $60 a barrel. So let's just say at $60 a barrel, and you increase the money, or you account for the 40% increase in the money supply. So what would that be? Times 0.4. Oops. So oil should probably settle, if it normalizes back at normal rates at about $80 to $84 a barrel would be my guess, just looking at this. So, but anyways, until we start seeing some, retraction or receding in the oil prices, I just don't see anything major happening. Oh, damn it. We just gave up a home run. Damn you, Seager. All right. Well, and it's now 3-2 with 1 out, bottom of the 9th. Astros are still winning. So I'll keep you all updated. All right. Last article I got here. Americans are moving out of urban counties like never before. If you haven't already moved, I would suggest doing it yesterday, because if things go as bad as they could go, you're not going to want to be in a large city, especially in a blue state or a blue county. So Americans leaving urban counties reached a new high in 2021 as droves of people settled in suburban and ex-urban counties. More than 2/3 of large urban counties saw their populations decline, according to a recent report by the Economic Innovation Group that used federal statistics. This marked the first time in 50 years that counties with an urban center and more than 250,000 people experienced negative growth as a category. While some migration patterns have been in effect before the pandemic, COVID-era remote work and delayed immigration accelerated the shift. Quote, the big key takeaway to me was how dramatic the effect was in 2021. August Benzo, the lead researcher on the study, told Yahoo Finance. Ex-urban counties saw the biggest increase across the board, with about 80% gaining population. These counties are defined as areas with a population smaller than 50,000, at least 25% of their population in a large or medium-sized suburb, and must be in a metro with a population of 500,000 or higher. Quote, while there has been much discussion of a flight to the suburbs, the share of suburban counties growing actually declined, the report stated. Instead, ex-urban and rural counties saw a rising share of counties that gained population, with non-metropolitan rural counties seeing the highest population gain since 2008. The share of rural counties with population growth underscored the demand for more remote places. Housing affordability and spaciousness are the likely culprits for the shift away from major cities. Quote, the tendency is just for people to maybe be attracted to cities where they're younger and then move out to the suburbs and ex-urban places to find bigger, cheaper housing when they choose to have families, Benzo said. That trend has always sort of defined the map. Urban counties saw huge gains in the early 2000s that began petering out after the Great Recession. In 2011, nearly all of the top 15 counties for population growth were large urban counties, whereas just 3 were in 2021. Quote, that trend really picked up after the COVID hit and during the pandemic as people started, for different reasons, exiting more urban counties and moving further out, Benzo said. Suburbs are the dominant forces of the landscape in terms of being where the cheap, affordable, big housing is. The result of the outward expansion from major metropolitan areas such as New York City and Washington, D.C. created a phenomenon that has been called the donut effect. As counties further out from the city centers grow their populations, city centers become hollowed out due to departing residents. Yeah, I guess that would kind of remind me of like Houston in the 70s and 80s. The downtown corridor was just dirty, bums everywhere. It was just nasty. And it probably wasn't until, well, I'm speaking about Houston specifically because I lived most of my life there. Probably wasn't until the 90s when they really started to clean up downtown. And then once they brought the ballpark, and the Astros moved from the Dome, which was over, kind of South Houston, to downtown, that area really just changed. Because I remember going to games 20 years ago when it first opened, and that area was kind of sketchy. And today, there's hotels and apartments, and you feel relatively safe. I wish I could bring my pistol into the into the stadium. I had to leave it locked up when I'm there, but yeah, I feel relatively safe walking around downtown these days. All right, where was I? However, the influx of people to suburbs and exurbs is more welcome in some places than in others. In some areas like Billings, Montana, the housing inventory hasn't been able to keep up with the increased demand, which has driven up housing costs for new and longtime residents alike. Other counties surrounding major cities hope to make the most of the population growth. Quote, there are definitely some negative effects in place that are getting too many people at once, Benzo said. But then there's also places that have been on the outskirts of metros and have maybe not seen a lot of populations grow and are now benefiting from having more people coming in and creating more jobs and more economic activity. Benzo added that it's a mixed bag, and it depends on how places can soak up all these newcomers and to what extent that it's a permanent shift too. Another population dynamic that showed no indication of slowing down was migration westward. For instance, Phoenix's Maricopa County, Arizona, experienced the most significant population growth despite being classified as a large urban county. Quote, overall, the Sun Belt and Mountain West continued to outshine the rest of the country, the report stated. Remote rural counties in eastern Oregon and northern Idaho experienced robust population growth, while every single county in Nevada gained population. Urban cores in the Great Plains and Midwest generally fared worse. Astros win. Woohoo! Where was I? Urban cores in the Great Plains and Midwest generally fared worse, with some exceptions, while all large urban counties lost population in the Northeast. In the South, Wake County in North Carolina, which encompasses Raleigh, bucked the trend by adding 16,651 residents, and metropolitan areas in Texas and Florida largely retained their populations. How these demographic shifts affect key issues such as labor markets, political maps, and resource distributions has yet to unfold. Quote, we're still kind of waiting for the dust to settle from the upheaval that the pandemic brought about, Benzo said. Quote, some of the effects of the pandemic that drove this migration are likely temporary, such as young people moving back in with their parents and the more affluent retreating to vacation homes, Benzo wrote in a report. However, it seems less likely that those who purchased homes in the suburbs and exurbs during the pandemic, motivated in part by new remote work options, will be selling and moving back to cities. So, like I said, it's, and I've probably been saying this for 2 years now, is that you need to get the hell out of, out of the cities because, it's A, they're dangerous, or B, they just, they're full of too many leftists who have no respect for, people's liberties, and they'll continue to pile on stupid laws on top of stupid laws. All right. Well, that's everything I had for today. I hope everyone has a fantastic evening. I'll be back tomorrow on Friday with the weekly wrap up. If you have any stories or subject matters you'd like me to cover, feel free to shoot me a note. You can go to dsafinancialgroup.com. All my contact information is there. You can send me a note. drop me a phone call, book a meeting, whatever you want to do. All right. Well, I'll talk to y'all guys tomorrow and have a great evening. Bye-bye.